Basically breaks down farm, let's hand them out while you're looking through. Go ahead and pass that back. I think I have enough for everybody. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Damn, not quite. I got more printing off. Hold on one second. Yep. Who doesn't have one? I'll make sure they all get one. I think I only print off 14. You got? You got? You got? Okay. There you go. There you go. I'll get you one at the end of class. I gotta keep going. Well, there you go. I knew I counted 14, right? Okay, we're all good.
There's an extra one.
Ooh, extra one I can read off. Here you go. Let me see that. Okay. Yeah, I'll get you this when I'm done reading it off. This is a record keeping manual. This will help you organize everything that goes on in your farm. Do not write in this packet. You use these as, you photocopy them, and then you put them into a binder. And then you use them as your records and use these as templates, okay? First section, going over farm description, everything as far as your equipment inventory, your field information, your orchard inventory, down to daily record keeping logs. Daily activity log. What more important than write down what you did today so that you can keep records of that? Field activity logs. The calendar section, I included the annual calendar and then the first month. The reason why I didn't include the rest is because it's 2012 that I have in my packet. So you're going to want to put a 2013, maybe even a 2014 in there just to stay ahead of the game. And you're going to use that calendar to write and take notes as far as your records go. Crop management records, crop inventory, how much are you harvesting, field activity records, especially about chemical treatment records, super important if you plan on being organically certified. Fertilizer treatment records, so that you know last time you fertilized a plant, you could write it down and do it in a very, very standard period of time. Irrigation records, pesticides, and field harvest records. Financial records overview, expense and income reports, annual or monthly financial summary. Ooh, doesn't that look important? Yes, you want to have a monthly financial summary, if not a quarterly. Annual financial summary, income records, and expense records, and then they want you to put your receipts in the back of the book. So that is an entire record-keeping manual. I think if you stay up on top of it, there is no question of what you did today, last month, last week, and how much it cost you, and how much you're going to make off of it. So there's data that you can use here. If you put down an X amount in fertilizers and you pull X amount in profit, maybe if next time if you put like 75% fertilizer down and then see if you're pulling in the same yield in return, then maybe you should stick with the 75%, save yourself 25% on the cost if you're getting the same return on your harvest. You wouldn't know unless you took records about the weight and the amount of fertilizer you put down. Of course, you're going to want to write down how much rain and all those other things. Crop records, folks, super important, okay? Pass this back to Lorraine, would you? And don't tell anybody I gave that to you. All right, direct needs. How much money? Question mark. Income needed to cover salaries. These are direct needs. These are things that you are going to have to use your profit to pay for. You need to pay your management salaries for sure. What are your long-term income goals? Well, that's certainly dependent. Well, this is certainly dependent on your long-term goals. How much money you want to make, you know. When do you plan on retiring? Well, that gives you a limited amount of time. If you set the date or set the time period, limited amount of time to pull your profit. Kind of puts an end to the I guess to the scope of things. What lifestyle do you want in retirement? That's super important when you're considering exiting, right? If you want enough to live the lifestyle that you have now, or do you have enough to live a little bit better than you do now? Or is downsizing a better option for you? Okay? Indirect needs. These are personal needs. What are you trying to get out of your business? Are you trying to engage in exercise or outdoor activities? Kind of hard to do when you're running a business, right? So if that is a personal need for you, that you have to get out and have time to go out and hike and all these other things, you need to have your business plan, especially your financial plan, reflect that. Do you want to do community contributions? Do you want to give back to your community in any way, whether it be financially or through time or resources? Do you want to spend time with your family? As a business owner, this costs money. You need to put a value to this. Every second you're spending with your family is another second you're not spending with your other family, your business, which should be just as important because that family feeds the other one, right? So, if that's super important to you, please have your business plan, financial plan reflect that. Vacation frequencies and other destinations. Everybody needs to take a vacation. I love when you go to the mainland and people ask me, like, why would I want to go on vacation? I live in Hawaii, right? Have you gotten that before? It's like, are you crazy? I have yet to take a vacation in 7 years where I'm not visiting my family somewhere else and being paraded around, seeing everybody, spending dollars, buying people dinner because they, you know, and then after it's all said and done, I dropped $2,000 and I still have yet to get to Puerto Vallarta or something, right? So think about vacation frequency. Please put, if you can, morale for your employees. Maybe a destination would be a nice reward for your sales team or something like that. A lot of businesses will do that, so please incorporate that into the business plan. What better way to boost morale, but also go on a vacation, right? If you could fund that with your business team. Question?
There's a pharmaceutical company, I think it was in Venezuela. They made their first $1 billion, so they brought all the employees over here. And then I helped them before.
Yeah.
Because they made their first $1 billion.
Right. Just the first billion. Notice they're saying first, like there's many more to come. That's the kind of attitude you need to look into the future. And hobbies. Kite surfing. Hey man, if you're into kite surfing or scuba diving like me or skydiving, we're talking about a very, very expensive hobbies. Golf. Can be very expensive hobbies. And then also think about the time you're taking away from your business. All right?
Boy, that's really thinking of yourself. Huh?
Yeah. Remember that the business plan is drafted around you. It's around you and your customers. Has nothing to do with anything else, but the whole thing should be drafted around your ideal, how much money you want to make, where you want to be in life. Okay? What do investors want to know? That's a little bit different. They don't really care if you want to make go on vacation a couple times a year. What they want to know is numbers, 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 right? How well will your business be doing? That's running, right? Okay. Revenue and expenses versus cash flow. We're going to touch on both of those. You need to tell your investors these things. You need to tell them what is your income over the next 3 years. Okay? Anybody who want to invest your company, I want to know how much money you're going to make over the next 3 years, if not the next 5 or 10. And that will be reflected in your income statement. Profit or loss over the next 3 years, which would be reflected in your balance sheet. They also want to know how much cash you have, which would be indicated in your cash flow statement. Okay? In addition to graphs and tables, they want this out in words as well, so that they can read it, and if they want to reference the table or the graph, they can. If they just want to stick with the paragraph form, then that's good enough. Okay? So when we're writing our business plan, in addition to the graphs and tables that are these three, you need to, in words, express these things so that your balance sheet makes sense. Right? There's great templates online. I tell you guys, bplans.com was a great website before they started charging people to use their service. It's still a great website to go to look at templates, or at least look at example graphs like the break-even analysis, and just understand how it's structured. I'll bring up a couple to show you, but it is still a good website to use as a reference. Please don't sign up for it. Ag plan. We'll go over that. Let's see, do I go over that now? Yeah, let's go over that now. Okay. Doot, doot, doot. All right. So once you sign up for agplan.com, you will be brought to this site, which will ask you what kind of a new business do you want to draft. Well, you got the options of agriculture commodity. I don't think anybody in Hawaii is growing commodity crops. But this certainly could be used to, say, talk about coffee or other things as well. Not considered a commodity crop, but could be used as a template.
What is a commodity crop?
So commodity crop are like the industrial crops, your corn, soy, wheat, barley. Anything that's traded on the commodities market with gold, silver, all those other things, orange juice and such. So commodity, you have ag added value, which I would hope that everybody's doing a business plan that not only does agriculture crop, but hopefully you're taking that crop and somehow doing an added value cost to it so that you can increase your profits for the amount of material you have. Whatever you're taking, jar it up, put a label on it, and charge 3 times what it would be worth as a wholesale product, okay? Just straight small business, commercial fishing, and a personal plan that is designed to help people write a personal career plan. Well, for instance, let's do this. Let's select an added value business. We'll call it James's Stuff. Create business plan. Hey, there it is. In addition to my other examples, James's potatoes, Felix's hot salsa, Joe's beets. All right, from this point, it says to click open. You want to edit your business plan. So you're going to want to view business plan. It takes 20 seconds, 30 seconds to bring it up, usually. There it is. Hey. Okay, folks. You see everything over on the left side of the screen? Doesn't that look familiar? Mm-hmm. Looks an awful lot like an outline for a business plan. Okay? If you go to each section, it will describe to you what is expected in an executive summary. Business description. A brief description of your farm or ranch in a few sentences, blah, blah, blah. What does your business develop or understanding your produce? What does that sound like to you? That's definitely the first part of the executive summary, which we went over the first day. Mission statement. I'm losing my mouse because I'm like all over the place here. Mission statement. Has a description of what a mission statement is at the bottom. It also has samples. How cool. So, organic vegetable production. This is their mission statement. Or Lake Shore Orchards, they don't have one. But there should be samples for pretty much almost all of them. Your goals, your plan summary, capital request, yada, yada, yada. Going down to business description, eventually operations. You got your marketing plan, talking about your customers. We talked about that. Contracts, pricing. We hit on all that stuff. And then we're down here at the financial plan, which is all the way at the bottom. So I would hope that you would have a financial position which communicates your financial resources that are available to you, talking about risk, liquidity, historical performance. Well, this is going to give an indication of your future performance and how you've done in the past and how you're going to continue to grow. If you don't have anything in the past, strictly can be like future projections. Financial projections, projected cash flow, income statement, all the things I'm talking about right now. This is where you're going to put in words describing those three documents. And you're, of course, going to put it right up here. You can change your font. You can get it structured however you want. And then once you're done, you should be able to preview down here. And then basically when the whole thing's finished, it'll compile all of it together. And you can include, I lost my mouse, attachments, all these things that you're going to want to include in your appendix and things like that. So what better program right here that help you build your business plan for you? Okay? Please use it. It's free. All right. I lost my... Where'd you go, sir? Where are you at? All right. Good? So B Plans uses a template. Please use Ag Plans as an actual source to compile your business plan. Let's talk about income statement. One of the three parts that you need to have. How much money will your business generate? We're talking about all the money's coming in, right? Income. Well, being a startup, you're not going to really have any past income. You're going to definitely want to talk about projections. You want to list your projected financial goals, at least for year 1, 2, or 3. If you're doing like orchard crops, maybe you want to do 1, 5, and 10. Just space it out so it makes sense for your product, okay? Hey, these look familiar, right? Remember when I said I want to see every section of your business plan having a best, likely, and worst case scenario? No more important than the financial section. Show your investor, show your funder that you are thinking ahead, that you may not be the most successful coffee farmer on the island, and if that's the case, this is what you're planning on making. This way, an investor can look in, and they'll probably look at this only, which is wise, because the worst thing that can happen is this here, and that's what he's willing to invest in. If it still sounds like a money-making opportunity for him, then he'll get in on it. So, but be honest and be correct, as I indicated early, right? Because they'll catch you. They'll know more than you. Most investors are going to know more about business planning than the average small business planner. Financial statement analysis. I have it broken down a little bit differently in the Excel, but just so you understand how an income statement basically goes out. Talking about your net sales. How much did you sell? The cost of the goods. How much did it cost you to spend in hours and materials? And then beneath you subtract it down for your gross profit. Operating expenses, research and development, that's your market analysis, right? Getting your product out there, how much does it cost to do those surveys and try out new materials? Selling expenses, general administration expenses, and total operating expenses. This is really vague. I would hope that you wouldn't do it like this. Let's stick to the Excel spreadsheet, which I'll go over in a second. But definitely operating expenses, selling expenses, and total operating expenses. Operating income, gross profit minus operating income gives you your total operation expenses equals your operating income, right? Other income and expenses, blank. There's interest on your loan payments. Interest on the income that you have coming in. Right? As you hold monies, interest, you gain interest on that cash, and total other income. Net income pre-tax, income taxes, net income. You definitely want to break it down and have years side by side when you're breaking that down. If not month to month, really great way to do it, or quarter to quarter. All right? Balance sheet. This, guys, the income statement, balance sheet, all this will make sense when I go through the Excel. But I want you to know what a balance sheet is. It talks about your profit and your loss over the course of 3 years. Projected profit and loss is best indicated in a graph. Year one. You go into your investor and you tell him that in year one, you're going to continuously lose money, but at a much lower rate as the year goes along, right? Yearly, profit yearly. So this is the year one, and then you have the 3 years broken down. I would hope that you would have a table for year one, year two, and year three up here. Then also indicating all 3 years next to each other. After the first year, $70,000 in debt. After the first year, you're making $10,000 in profit. The next year, you're making, looks like close to 30. Right? Just give an indication of growth within your business. I need to see the table moving upwards. I'm sorry, the graph moving upwards. Break-even analysis. I got this from bplans.com. Check it out. Right? What do we have here? Profit, breaking even, and cost. So, as over time, well, essentially it's going to be break-even analysis would indicate that right about here when you're crossing the zero is your break-even analysis. This is when your amount of money you're putting in equals the amount of money that you're making. Anything above this is profit. So I need you to tell me how many units you need to sell $14,000 in units in order to break even. I need to know that information. Whether it be number of units, I would prefer dollars, but you could do number of units. Even if it's a service, like just mowing lawns or whatever, you do landscaping, keep it as a value. You need to make $14,000 a year in order to break even. Keeping that number super low and every year moving it back and back and back is the goal. So if you can have a break-even analysis stretching 1, 2, 5, 10 years, and you're indicating that you're making more and more money producing the same product, only because you're able to get your materials for cheaper, you've figured out ways to do production at a much cheaper rate, and then getting your products out to your customers with much more ease and less expense. So hopefully, through the life of your business, this dot is moving that way along the graph. You start figuring things out. It's just that easy. You figure out what works, what doesn't, and you do the things that work and you get rid of the things that don't. Projected balance sheets. Balance. You have in and out, right? So you have current assets. This is a value. This is what you are worth. The value of your business, how much cash you have on hand. How much you have in accounts receivable, so orders that are being processed. Current assets, other current assets, so equipment or whatever. And then total current assets. Long-term assets, accumulating depreciation. All right? Accumulating depreciation is a little bit of a mathematical equation that goes out versus the life of a piece of equipment, or basically say like a tractor or a truck, that after a period of time, even if you don't use that truck, it depreciates in value over time. So you need to indicate that, yes, you have equipment, but we need to talk about the accumulated depreciation over the course of that year on that equipment. Okay? Remember that when you take anything off of the lot, it loses it has a major depreciation as far as its value. So, acquiring your equipment or whatever, maybe outside of the dealer realm, is probably the best way to go. A lot of folks that don't have funding, that's not an option. You have to finance your equipment, and you get stuck in that depreciation. Total assets right here, and liabilities and capital. Total assets. And then you have your liabilities and capital. So you have what you're worth versus what you have to pay out. Current liabilities, accounts payable. How much every year do you have to pay out for your accounts? Current borrowing, not borrowing anything according to this. Other current liabilities and subtotal of current liabilities. Long-term liabilities and total liabilities. So you're going to compare your assets with your liabilities. Paid in capital, retained earnings. Anybody know what that is? Explain it. You might want to explain retained earnings. It's essentially the money. It's what you're thinking of when I say profit. It's after the depreciation value, after taxes, after everything else. That is your full profit. Your earnings, and then total capital, total liabilities, and then eventually net worth. And finally, the last part of the 3, cash flow statement. What are the operating needs of your business? What does it cost to run your business? Well, handling cash day to day, business equals a revenue generating machine. That means every day you need to do cash flow for your business. Now, what better way to use software or something to do that for you? As long as you have the right methods in place, then the software can certainly do that for you. This is used in management and certainly in forecasting the future. How often is cash flow management a problem for small businesses? It's really not that commonly that big of a deal. It's just an occasional problem for about 50% of the businesses. Occasional usually being like a seasonal thing. Businesses not realizing that you have a certain kind of waves to your profits and how many products you're selling, and not really understanding your operation side is probably the cause of this. A lot of businesses have no problems at all. Why? Because they have software and they have things in line. They have financial professionals running their business or in their business. And then some people that have a continuing problem, be about 20% of the businesses out there. Why? Main reason, they don't have talented individuals in the right position. They have friends, family, people that they're doing favors for in certain positions. They need to move those people out and find somebody that knows what's going on with finances. Okay? 9 times out of 10, this one right here is just poor management.